I would be very, very surprised if Bitcoin price would be below $100,000 at the end of the year. That would, well, sort of invalidate my view, my models, and that would certainly surprise me. I do think we will see a price that is at least $135,000 by Christmas, because that's what my floor model says.
All right. First, I want to start with stock to flow model. You're the creator of this, and most people point to it as kind of the single guiding light to them in terms of the relationship of Bitcoin's price to these halving cycles. So talk us through a little bit about what the stock to flow model is and then what it's showing us so far.
Yeah, so the stock to flow ratio is a ratio from the commodities market, actually, that tells you something about an asset's scarcity. It divides the stock, the reserves of a certain asset by the flow, the newly issued Bitcoins or gold, newly mined gold. And if you divide the stock by the flow, you get the stock to flow ratio. So that ratio was known for ages in the commodities market. What I did was connect that with the market value of, well, Bitcoin in the beginning, but later also the other assets like silver and diamonds and gold and real estate. And what you find that there is a perfect linear relationship in the logarithmic space. So that was quite shocking. And with that, you can actually predict the price of Bitcoin very roughly, I should say, but you can do it. And because we know the stock to flow ratio of Bitcoin, it's pre-programmed, and that's a very nice thing. And it's of course very bullish at the moment. It predicts somewhere around $100,000 Bitcoin for the current halving cycle, which is 2020, 2024. So we're actually heading towards that. Yeah, it's that.
So when you think of the stock to flow ratio, one of the things that I'm fascinated by is it comes from the commodities market, but it's actually potentially more accurate when it comes to Bitcoin, because we know with certainty and can prove the supply of both the outstanding supply and the daily incoming supply. Describe a little bit about why that certainty and that verifiability is so important to the accuracy of a model like this.
Yeah, so for example, with gold, we don't know how much gold is mined every year. We can make a forecast, but we don't know it precisely, and a lot of factors impact that supply, that mine supply of gold. And one of the factors impacting that is price, right? If the price of gold is high, then the miners will increase their production, and if the price of gold is low, they will decrease the production and the mining of gold. With Bitcoin, the whole production, the whole flow is pre-programmed. Every 10 minutes on average, right? Every 10 minutes there's a block, and in that block is a block subsidy with the new Bitcoins for the miner that found the hash of that block. So we know sort of that every 10 minutes and for the whole year how much Bitcoins there will be mined. Of course, we don't know it exactly because there is some variability in the 10-minute interval. Sometimes it lasts an hour. Sometimes you have like 3 blocks in 10 minutes. But on average, we know, and especially long term, we know what the stock to flow ratio will be, and thus what the price will be roughly.
So when you think about these halving cycles, obviously there's a supply shock, but how do you think about kind of the cyclical nature of this, right? Is there a point where you expect the model or ratio to be invalidated, either through external forces or people start to kind of price it in and front run it? Like, how do you think about the fact that we do know the supply, and that helps for the accuracy of stock to flow, but at some point, does that become a negative?
Yeah, there's several aspects to that. Of course, from efficient market hypothesis, you would expect that this knowledge and the model would be priced in. So I actually, and most people with me, expected the halving, the May 2020 halving would be priced in already. So we would not see the actual price rise that we're seeing now. That is very much in line with the stock to flow model, because all the information is out there, the stock information, the flow, the stock to flow ratio, and the model. So it shouldn't follow the model as closely as it does today. On the other hand, there's a lot of people not believing the model, and the model, of course, hasn't proven itself. So maybe that sort of puts the efficient market hypothesis argument aside. But on the other hand, I think that the stock to flow model will break in the future, because one of the nice things about the stock to flow model, and especially the stock to flow cross asset model, stock to flow X model, which also incorporates data from the gold market, diamond market, real estate market, and silver market. So other stores of value, if you will. If we look at that stock to flow X model, we can interpolate the data because gold has a higher stock to flow ratio than Bitcoin, and real estate has a higher stock to flow ratio. Gold is 60, around 60, and real estate is around 100, where Bitcoin is 50, 55 right now. So we know we can, within the data set we have available with gold and real estate in there, with market values of 10 trillion for the gold market and 100 trillion for the real estate market, we can interpolate within the data set, and of course that ends, because if Bitcoin will have its next halving in 2024, the Bitcoin stock to flow ratio will jump to 100, which is which is approximately the same as real estate. But after next halving, when we jump to 200 stock to flow ratio for Bitcoin, we're out of the model data bounds, if you will, and then we have to extrapolate, which is what basically all the other models are doing. They're extrapolating into the future, which is very dangerous. And one of the big assets, big advantages of the stock to flow model, the stock to flow X model in particular, is that this interpolation can be done. So to be in short, I think the stock to flow model will end to be valid somewhere after next halving, when the stock to flow is above 100, because we cannot interpolate anymore. And of course, that means probably that the dollar, the denominator in that model, will end to play a big role, or something. Of course, it doesn't say that Bitcoin will die or something. It's it's just a model will not be very accurate after that.
First, how do you think about what I'll call more quantifiable metrics and analysis with things like regulation or things that seem to be more external to the asset itself? Do you worry about that stuff? Do you think about it? Do you incorporate it in any way into your analysis?
Yeah, I certainly think about it and follow it like a hawk, because the big moves in Bitcoin were all sort of triggered by regulatory changes, regulatory clarity. So I track all the important news and I put it in a database as well. However, I don't use it as an explicit input variable in my models. Both the stock to flow model, which only has one input, which is stock to flow ratio, but also the on-chain models or the floor models, or more technical analysis based models, they don't use that kind of information. But in fact, those kinds of news events, it could be regulatory news, but it could also be other macroeconomic news, like El Salvador adopting Bitcoin or China banning Bitcoin, etc. This kind of news is very difficult to predict once it happens, and what the impact will be. Is it priced in? Do people expect it or not? So I regard those as trigger events that create an outlier in the model, or and that means that there is a spike above the model value or below the value of the model. But those spikes, those trigger events are very rare and are very like black swan events. So they cause some variation in the model, some model error, but they don't disturb the general trend in the models. That's what that's how I look at it.
And how do you think about your investing philosophy? Do you try to trade around the asset based on all of the data you look at? Are you just dollar cost averaging, buy and hold? Like talk to us a little bit about the philosophy that you use, given that you do have at least an understanding of what some of the data says. Does that change what you do at all?
Yeah, but I'm more an investor than a trader, and certainly not a day trader. So I was lucky to buy Bitcoin in 2015 and 2016 when the price was 400, 500 kindish. Those are my Bitcoin investments, and I've told in other interviews as well that I sold half of that stash in shortly after the peak in December 2017, based on stock to flow kind of models. So and I reinvested that half that I sold just before I published the article about stock to flow, because I knew we were at a very low level compared to the stock to flow model at that time. So in that way, I sort of trade or sort of try to time the peaks and the bottoms, but that's on a monthly or even yearly basis, and I certainly do not trade on an hourly basis. That being said, I am very intrigued, as you know, by on-chain analysis. I do a lot of on-chain analysis, and I have a great team of quants around me that can do all sorts of programming, the blockchain data, and getting signals from there, and that's very, very interesting. And sometimes you can actually find patterns that are tradable on a daily or weekly or monthly basis, so on a shorter interval than I'm used to invest, and we are making use of those patterns with algorithmic trading software. So we write our own trading software that automatically scans for those anomalies and make use of that. And that was one of my skills also in my institutional career. That the algorithmic trading part is very, very interesting in the Bitcoin space.
Tell us more about the institutional interest, whatever you can share, whether it's organizations that you work at or have worked at, or just kind of conversations with former colleagues, peers, people you know in the industry. What's the general sense from the institutions in terms of Bitcoin, what they're allocating, how they're thinking about those allocations?
Yeah, so I'm Amsterdam-based. I talk a lot with European investors, some US investors, but it's mainly a European perspective that I have. Well, certainly the companies that I worked were not very interested in Bitcoin yet, mainly because of regulation and misinformation, if you will, because most of them thought it was for criminals. It was for and governments would ban it and all that. And of course, for an institutional party like a bank or an insurance company, they have capital regimes with their central bank. So they'll have to put capital aside for every investment they make. If the investment is more risky, like Bitcoin, they have to park more capital for that investment. And for Bitcoin, it's almost 1-to-1. So if they would do $1 billion in Bitcoin, they would have to park $1 billion in equity as well. And that is of course not doable. It's more doable for hedge funds. So what I see is it's not the big institutions, pension funds, insurance companies, and banks that are investing on their own balance sheet or are interested in Bitcoin, but it is the hedge funds, the family offices very much so, and commodity investors, especially the gold and commodity investors are of course very much into the same philosophy that Bitcoiners have with sound money. So family offices, commodity investors, and hedge funds, those are the ones I see active, and the other ones will be late as usual.
Yeah. And when you think about portfolio construction for yourself or for the institutions, maybe both, is this still something that is like a very small allocation, or is it something that is being used to like denominate the whole portfolio? Or how do you just think about the portfolio construction and any sort of concentration targets?
Yeah, that's a tricky question because I think for institutions, of course, that's very important to keep the risk profile sort of constant and within their mandate. So they'll have to sell Bitcoin as soon as it rises to keep the concentration low and within mandate boundaries. But with hedge funds or family offices or for my own investments, I don't have those mandates or boundaries. So I can what I see in practice, that what starts as a small investment, a couple percent investment in Bitcoin, soon grows to a double-digit position in Bitcoin. And well, after a few years, 4 or 5 years, it sort of dominates your portfolio. That sure is true with my own investments as well.
What do you think is the likely price for Bitcoin by the end of the year? And do you think that the bull market ends at the end of the year, or does it carry us into the beginning of 2022?
Yeah, that's the most asked question. I would be very, very surprised if Bitcoin price would be below $100,000 at the end of the year. That would, well, sort of invalidate my view, my models, and that would certainly surprise me. I do think we will see a price that is at least $135,000 by Christmas, because that's what my floor model says. And basically, I'm using 3 kind of models that all say the same thing. So stock to flow, which has 100,000 on average for the entire cycle, and mind you, we're 1.5 years into that cycle and with below 100,000 prices. So we'll have to spend the next 2.5 years markedly above 100,000 to make that average. And the second model I use is the on-chain stuff. That on-chain stuff is really good at identifying bottoms and peaks. So we're now talking peaks, of course. So I know quite well, certain, not guaranteed, but I will have high confidence in that the on-chain indicators will signal a top. And if we look at the on-chain signals right now, I would say that top is at least a couple of months, say 6 months from here. So that would be end of Q1, maybe later. And then the third kind of models that I use, of course, is that floor model, the 135,000. That's not based on stock to flow. It's based on other. It's a proprietary thing, but it's based on other stuff, technical and on chain. So yeah, and by the way, that's very good at, like the name says, at indicating bottoms. So I guess we will be above 100,000, above 135,000 at the end of the year, and then we'll continue to grow, maybe towards the stock to flow X model targets, 288 or even above. I would not be surprised even to see in Q1 or Q2 next year prices of 300, 400, 500,000 dollars. But I do think, and I noticed you were talking before in this show that I'm full bull. I am right now, but I'm quite sure that there will be a time when I switch from bull to bear, like I did at the end of 2017. And to be honest, I'm a bit of struggling with that, because I don't want to disclose it, because I want to at least disclose it responsibly and not be responsible for triggering the bear market. So if people have ideas for that, I think they're very welcome.
Joe, what questions do you have?
Yeah, Plan B, thanks for doing this. I know I'm a big fan of yours and your models and your analysis, so I know a lot of others are also. My question would be around kind of the correction that you just spoke of, right? Which is, We're at 57, 58,000 now almost. You're saying that it's going to average at least 100,000 over this cycle, which is 2020 to 2024. So we obviously have to go much higher, whether it's 300,000, 400,000, 500,000. We'll see. But traditionally, there's also been an 80% correction. So is that something that you think will in fact happen again? And kind of how are you thinking about that in the long term?
Yeah, I do think that's exactly what will happen again. I can be wrong, right? Let me be very clear. I can be wrong, but I do think that 4-year cycle that is sort of triggered by the halving is a very real thing. It has to do with the scarcity of Bitcoin. That's to do with the shortage that we're seeing right now. Bitcoins are traded on exchanges, and the exchanges have some inventory of Bitcoin, and you can buy it, you can sell it, but it's basically not on-chain transactions. It's Bitcoins that are on the exchange, and you buy them from other sellers, and you sell them to other buyers. But if you look on-chain, so the Bitcoins that are in cold storage that large investors have, you can very clearly see these waves of shortage, and we're in one right now that will at least last another couple of months before it's really well out of sellers, if you will. But yeah, from there, and what other news will trigger it, I don't know. I do think there will be a crash, and it could be as large as the crashes we've seen in the past. We have had 3 crashes of 80%, and I see no reason why we couldn't have another one, which of course is always short-lived and an excellent opportunity to buy more Bitcoin. But it could be quite scary for newcomers, which is precisely what, of course, those cycles do. They shake out people that are leveraged, that are investing with too much money, that are not certain of their investment strategy, that are those you need those really committed hodlers, if you will, and they'll rise again.
When most people would hear, let's say 2025, $1 million to $5 million, that feels like it's a very wide aperture in terms of outcomes. Help people understand why it's so hard to pinpoint, $1 million to $2 million, let alone $1 million to $5 million, right? I don't think people quite get kind of this idea of, even into Q1, Q2 of next year, if your kind of thesis plays out, you said, hey, 288's in the model, but 300, 400, 500, that's a pretty big variation as well. So help people understand like what drives that variability there.
Yeah, I think that's an important question, and it's funny to see that how naturally and logical that path of Bitcoin is to me, and how amazing it can be for newcomers and traditional investors indeed. And the trick is to look at it exponentially, so in logarithmic scale, if you will. Because it's not about the price level, it's about the growth level, the percentage growth that is constant or high at least. And maybe to explain that, if you look at my followers, which is 1 million now, which was unthinkable even a year ago, let alone 2 years ago. So 3 years ago, I started with I crossed the 1,000 followers boundary, and a year later I crossed the 10,000, and then a year later, so the second year I crossed the 100,000, and now in the third year I crossed 1 million. And if you look at that path, it's 10x every year or 20% every month, and so it's amazing growth, and people start to see it when you're big, but in fact it's a constant growth of 20% per month. And yeah, that was 200,000 new followers last month, but it will probably be 220,000 new followers next month. And so that 20% is constant. And the same is with the Bitcoin price. Bitcoin goes, let's say at 10x every 2 years. So 100x every 4-year period. And that is amazing. To hear that, but if you actually experience that or look at the data, but that's different. But if you experience, and as I did, of course, buying at 400 or 500 and then going to 4,000 or 5,000, and now we're at 40, 50,000. That's 100x, and there are people that have 1,000x their investment or 10,000x, and that constant growth, I guess, is very specific to Bitcoin and triggered by the halving period, the scarcity that's intrinsic in Bitcoin, and that makes it such a perfect store of value, and more and more people will recognize this unique property.